Hello friends, welcome to the channel of High Stock Returns. Today we'll be discussing about evergreen stocks in the Indian stock market. Which stocks you can choose, and you can invest in these stocks anytime. And why they are evergreen stocks, that will be explained. Essentially, these stocks have a sound business model and sound track record of last 20 years. You can hold it forever in your portfolio, and annualized return you can expect at least 15%. And these are the safest stocks in the stock market market. And who are the new entrants in the stock market, who are the novice, they have little experience in investing. These people can invest in these stocks straight away. So let us know what are they and what are the reasons behind it. First stock is the TCS, Tata Consultancy Limited. This is a flagship company of Tata Groups. And if we see that last 10 years, the average return it has given 16% annualized way. And it has been appreciated more than, 4 times in last 10 years. In 5 years, if we see, the return is 27%. What are the reasons behind it? Why, how the company is generating cash consistently? So, first is that it's a debt-free company, and also it has a clientele base across the world. It has also sound track record of dividend and bonuses giving. It provides solutions to government and non-governmental organizations across the world. So it's a global company. So it doesn't, any local disturbance in India doesn't impact the revenue of this company, because it has a clientele and generates the revenue across the through the customers across the world. It signs long-term contracts with large companies to maintain IT infrastructures, like leading banks in UK, Europe, the leading transportation services across the world. And it's a future 500 Fortune 500 company, and more than 30 years of experience is there with the management to go through the different type of challenges, as well as upcoming challenges in the IT industries. So there are other equivalent stocks apart from TCS you can think of is Infosys, Wipro, Tech Mahindra, HCL Technology, etc. The next good company is that which is the owner of the franchise called well-known Jockey. It's called Page Industry. Last 10 years return you can see 26%, and 5 years 30%. Rationale is that it's a debt-free company. It has a sound track record of dividend. It operates under the underwear and sportswear business, which is evergreen business. It has a low penetration. In India, there is a low penetration of such kind of underwear, garments, sportswear, and sleepwear in India. So there is a huge potential to appreciate this stock, and the demand will increase in coming days. And one of the most important point is that it has a very superior quality underwear, sportswears, and sleepwears. So it has a huge clientele of premium customers which would like to come again and again and buy these products. Other equivalent company in these areas are Rupa Limited and Dollar Industry. You can also check out. Next company is TTK Prestige. As everyone knows that the Prestige cooker manufacturer, and there is no introduction required. Last 10 years of return is 22%, 5 years is 16%. It's virtually debt-free company, giving regular dividends. It operates under kitchen and home appliance business, which is evergreen business, and it is highly underpenetrated. Especially the rural market, the tier C and D cities, still there is a huge potential to improve, and people will start buying the branded kitchenware. It has 37% market share in kitchen appliances, and it has a well experienced management, and it also supported by the superior quality products, which maintains its customer base. Other stocks in this kind of categories: Stowcraft, Hawkins, Butterfly, Gandhimati. You can also look into that, which has a similar kind of pattern. Next stock is the Procter and Gamble. Yeah, and you know that he is the market leader in men's shaving segment, and having owner of a popular brand called Gillette. Its return also is handsome in last 10 years 14% and in last 5 years 22%. It's a debt-free company, and it's a, in a subsidiary of MNC Procter and Gamble USA. Sound track record of dividend. It has a popular brand under his portfolio like Vicks, Ariel, Pamper, Whisper, Tide, Gillette, Head and Shoulder, Pantene, and Be Pure. These products will have a demand forever because it's a fast-moving goods, and these products are under penetrated in the rural area and B and C cities. So we can see that as more the internet and the marketing will reach to the rural and these areas, and people income will rise, and more and more people will start buying this kind of product. And it's a proven management track record, and being MNC, always it keeps on adding a new products from its rich R&D center in USA. And of course the product qualities are very good. People would like generally like to consume and stick to that product over and over time period. Another equivalent in this area is Hindustan Unilever. Another important stock is the Asian Paints Limited, which is a market leader in decorative paint. You can see 10 years average return is 15%, last 5 years is 23%. It's also a debt-free company and having a sound track record of dividend. It's market leader in decorative paint with 40% market share. As we know, paint is also evergreen business. Any establishment, whether it's a commercial or residential, painting is needed for every 5 to 6 years. So you can understand that business is evergreen, and huge scope in rural area, as I said, that where people will like to have a decorative paints in their houses. And the management is well experienced and conservative and conserve the cash for expansion, and it is having a very growth oriented management, so it keeps on expanding in interior decoration product like the acquisition of sleek and other areas in carpentries. So that augurs well for the future of company. A must buy, and it has to be a part of your portfolio. Other equivalents are Berger Paint, Kansai Nerolac, and Indigo Paints. The next one is the Pidilite Industry. As people know, that is the owner manufacturer of the very popular brand called Fevicol, M-Seal, and Dr. Fixit. The return of last 10 years annualized return is 27%, and 5 years is 23%. And virtually debt-free company, regularly paying dividend company, and market leader in adhesives with 90% market share. Evergreen adhesive, sealant, and home interior business. So you can understand that the sales will be very regular, and there is huge scope as rural India and the B and C grade city expands into further way for the commercial complexes as well as the housing boom. And the management is also well experienced, conservative, and they know how to utilize the cash in the right direction. And of course the product quality is superior, and people are buying Fevicol and other products again and again. It is the favorite of all the masons, carpenters, and all. So there is no doubt in this. Next company is the Larsen and Toubro, which is a largest infrastructure and engineering company in the India. Uh, and in last 10 years, average annual return it has given 15%, and last 5 years it is 16%. And it has a large presence in India's infrastructure project like highways, airport construction, high-speed rail and urban train development infrastructures. It is also diversified in the technology area. You might be knowing L&T Infotech Mindtree are the subsidiary of Larsen and Toubro, which are specialized in IT solutions. L&T is also a big EPC company in the area of hydrocarbons, which has a presence in petrochemicals chemical industry, and it has a clientele across the world, mainly in Middle East areas. It has also presence in the defense and power projects, which is providing one more revenues from the other areas. And order book always remains 3 to 4 times of its annual turnover. So it's a very good company and having a long insight, in the infrastructure projects. So it's a good buy and to have it in your portfolio. Another company called Hindustan Unilever, I think everyone knows, India's oldest and dependable FMCG company, and there are several investors who got benefited of holding these stocks over a long run. Definitely annualized return over 10 years is 15%. So you can see as a compounding it will go for 5 times. Last 5 years average annual return is 16%. Um, doesn't require much introduction, debt free company, paying a dividend regularly, and it is in the evergreen business of FMCG, and it keeps on diversifying its product as per the market needs and launching new products. So um, it is a must buy and to have in your portfolio when the prices are reasonable. Other alternatives are ITC, Britannia, Marico, Dabur, and all. So these are the companies who are the evergreen. There are other sets of company which provides very high dividend yield and also appreciate a little lesser rate, but overall appreciation is also 15% on annualized base. And these companies are also providing good return over 15% over a long run. So there are several studies done. I think there is one book over there by Rajesh Kumar, who is stock market veteran, and he describes what are the characteristics of these high dividend yield stocks, and with detailed data analysis and the last 10-20 years of track record, and he identifies some 25 companies having a strong track record. You can just read this book from Amazon or somewhere available, and it discussed the entry point and exit point of each stocks if you want to. So I would not waste time in that, and you can have insight from this book that what are these high dividend yield stocks. So with this, thank you for listening and have a happy investing stock market.